Okay guys, good morning. It's currently 9:30 a.m. So I want to cover why I shorted gold. Now this was kind of against the overall narrative of the market. However, this was mainly based on the historical moves of gold and technical aspects. And I want to sort of take you through it because I don't think it's something that many people really saw. I did see a few people take shorts on gold, but not that many. There's a lot of people taking long positions. So this looks like a mess. I completely agree, but I'll break it down so this makes sense and you can understand what's going on. So I'll focus here first. So this was back in April of 2024. So this year, this is when we created the all-time high. So you can see all-time high formed. We dropped down. So the market created an all-time high here, came down, then came back up, and then came back down. So that's exactly the same pattern we see here. And what is this? So when the market reaches all-time highs, we tend to see, especially on gold, and like indices as well. So you can see the same thing on NASDAQ, Dow Jones at the moment. I mean, we are also in earnings season as well. So that's helping push those markets down. But we do also see a lot of profit taking. And this profit taking is by the masses. So it might be a lot of retail. It might also be a lot of the larger market participants. And that's what can cause this large drop that we see here. And then when the market comes back up, I've got this labeled as a bull trap and not a pullback. Excuse me. And the reason that this is a bull trap and not a pullback, in my opinion, is because the market is still heading up and the market's pulling up. So this isn't necessarily a typical pullback. The reason this is called a bull trap is because the market has pulled back here. So this initial move to the downside after the profit taken, that's the pullback. And then we come up. And this is where the bull trap comes in. So people see that we created a potential lower low, or sorry, a higher low. And they start buying and buying and buying again to try and reach a double top or break all-time highs. So it traps people that are bullish. And then it fades off, and that's when we see continuation of either profit taking or sellers coming into the markets. So that's what you can see here. So we came up, we came down, we came up, trapped the bulls, and then we faded to the downside. And now if we look at the second time when we reached new all-time highs, we had exactly the same thing. We came up, we came down, we came up again with this bull trap, and then we came down. So that's happened twice. And that's happened both times when we've recently just broken or formed new all-time highs. So if we look here, let me delete these trend lines because they're not really part of this analysis. So let's look again. We've created all-time highs. We've come down. We've come back up and we've come down. So using that already sets us up for a sell because it's happened twice very recently. So why can't it happen again? Well, it very well could, and that was the basis of this analysis. So to actually get into the market, what did we do? Well, you know me, I love a Fibonacci. So we draw the fib from the high to the low, which this was the low at the time. So we draw that here. And we look and we say, okay, well, this fib golden zone lines up with this level of resistance, which was kind of at the previous all-time highs. I was like, okay, well, that looks good. So we saw this really strong rejection of the 50% level, and I love the 50% pullback level. I think it's a really strong level to catch valid pullbacks. So this was the bull trap that we caught. I mean, the market didn't come as high as I would have liked. I would have liked to see a little bit higher, but that's not a problem. You know, the markets aren't perfect. So we saw this pullback to 50%. I entered, and we saw this this move to the downside, which is the fade, which, exactly the same thing as the past two times. So that's essentially it. Now I can show you the proof of execution here. This is the Darwin X account that I took the trade on. Oops, where's it gone? Here. So here you can see exactly the same thing. I drew the fib, so you can see the fib is here at entry 1 and 2. You can see my sell position here. Golden Gates even signaled this sell. If you don't know what Golden Gates is, it's my custom indicator. You can get a link to it in the description. So we entered the short position here. We also rejected R2 at the time, which is this red line here, the second one. This is R2. So Pivot points are based on mathematical levels of the previous daily moves. So it's a good level of resistance based on mathematics and statistics. And then we just sort of dropped to the downside. We saw price get stuck on this S2, and that's where I decided to take my profits, seeing as we broke our take profit 1 level, which was the previous low. Now, the reason I'm not holding this trade is because I'm not necessarily a bear on gold. I was purely trading this from previous movements and potential profit taken in this market. So that's essentially it, really. I decided to take this trade when we had this 1 hour close. So you can see right where this 1 hour candle closed, that's where I entered. And as I said, it rejected this R2. Which is really significant, especially when we're looking to sell. We see a really strong rejection here off this 50% level, and that's where we entered. So I would really have liked to have a take profit down at this fib extension, but as I said, this isn't necessarily a short trade that I want to hold for too long. This was more just a following the market type of position. Now, don't come away from this thinking that, you know, I'm some super trader or that this is really, really easy. I can do this all the time. I actually want to preface that I've had a really, really bad month trading. This has probably been one of the best trades I've taken this month, other than one on euro dollar that I had a great trade on. But I have had probably the first losing month this month that kind of stung. I've not had that feeling since I actually started. Well, you know, back when you're sort of learning trading, you have some losses and they kind of hurt you inside. I had, yeah, just one of those months where it's just not been good. So that's why, you know, I want to just emphasize that and be completely transparent. I don't want to sit here and show you all my wins and break all my wins down and never show you losses, or even talk about losses. So I think that's quite important. But yeah, as for the stop loss placement, the stop loss was obviously just above this fib level here, the golden zone. So nothing complex behind that one. But yeah, it was a very simple trade, actually. There was nothing complex here. It was more just being able to look at the market and break it down quite simply. But yeah, I think overall on gold, I'm not necessarily looking to sell. So if we were looking to buy, we could even potentially say that now is a good place to buy. So again, if we draw the fib from low to high, we do have this exhaustion at the 200 moving average. The RSI is oversold. We are in the fib golden zone. So this wouldn't necessarily technically be a bad place to sell. However, I am still very cautious of profit taken in this market. So I will not be buying it and I will not be selling it right now. I'm just going to sit on the sidelines, let gold do what it needs to do. Also, ignore the hair and the way I look. I need to go for a haircut tomorrow. I'm going away pretty soon, so I'm just waiting for a haircut for my booking. So yeah, anyway guys, that's about it. I just wanted to break this down, show you it's a slightly different perspective on gold than I've seen really on YouTube or social media in general, but it worked out really well. So yeah, have a great day. I will see you very soon. Thank you for watching. Make sure subscribe and like the video if you want to follow my trades. If you want signals, you can go to the link in the description, join the Discord.